The dollar versus Canada is moving to the downside over the last few hours of trading, helping to boost the Canadian dollar's value. Is the rising in the oil prices. Oil prices moved higher because the Trump administration said that they would add to the strategic petroleum reserves, and the energy secretary also added that it's a great time to buy oil. That has oil prices moving higher, the dollar Canada moving to the downside. I'll talk about the technicals that are driving this currency in this video, so let's get started. I'm going to start by looking at the daily chart. Now, what is of significance off the daily chart for me is the inability to stay above the 38.2% retracement of the 2025 trading range. That level comes in at 1.40176. It's of this move down from this high right here to the low price right here. That is January high, mid-year low. The 38.2% retracement was broken last week trading. That should have sent the price higher, and it tried to stay higher, but then it rotated back to the downside, and we're seeing increased selling. By the way, that 38 comes in at 1.40176. Let's go to the hourly chart, and this red line represents that 38.2% retracement. As you can see in trading here today, the price has been or traded above and below it earlier in the day. The last rise to the upside, however, did find willing sellers against a key technical level. That level was defined by both the 100 and 200 hour moving averages at the 1.4030 level. The inability to get above that level helped by the headline data, which about the strategic petroleum, and it's goodbye to buy oil, and oil prices moving higher, sent the Canadian dollar Canada to the downside, the Canadian dollar higher. Typically, when oil prices go up, the Canadian dollar is supported. The dollar Canada moves to the downside, so be aware of that dynamic. But that has pushed the price away from that 38.2% retracement level of 1.40176, which is now upside resistance. As long as the price remains below that level, the bias remains to the downside. On the downside, I would focus the next target at this area right through here, or the high of this area right through here, and the low right here. I put a box around that area right through here. This area would confine the trading range going back through this period right here, about a week or so of trading, maybe a little bit more before breaking to the upside and finding support on the dip right here against that level before moving to our high. So this area comes between the 1.39315 level and the 1.3970 level, and at the bottom of that is also the 200-day moving average of 1.39369. So with the price moving lower, we'll see what happens here at 1.3970. Do we find support buyers against that level and rotate back to the upside, or do we break below that level and start to move down toward our 200-day moving average toward the 1.39315? That's the next decision for traders on the downside, but sellers are more in control as long as the price remains below the 1.40176 level in the dollar versus Canada. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.